Investors and traders, welcome to the general market chart pattern. Today we'll be taking a look at the major US stock indices. This video is for educational purposes only and it is not a financial advice. We are taking a look at the daily chart of SP 500 E-mini futures. If you have been following our channel and the videos, we had been looking at a key level of 39.40 to 39.39 for some time, and it is because this level is the 38.2% Fibonacci retracement of the lows of 13th of October 2022 last year to the highs of 2nd of February 2023. Also, it is the 61.8% Fibonacci retracement of the lows formed on 22nd of December 2022 to the highs of 2nd of February 2023. Also, something which we don't really take a look at quite often, but rarely, it is also a extension of our ABCD 1-to-1 move, which we essentially look at all the time, and that level also comes around here. So basically what you see in the orange lines, it is this one expansion of this segment by 1.618. So we have got a good confluence of support coming here around the 39.40 level. So this is the one which we are following very carefully. If this level gets broken down, then we'll have to take a look at the market in a different way. But for now, we expect this support to hold, and perhaps the price could begin to resume higher. This will have to see. So let's also take a look at the Russell 2000 here. So Russell 2000 completed a bigger ABCD pattern, the 1-to-1 projection, which we like to call ABCD, around the 2nd of February 2023, the beginning of the last month. And the key level support level for us has been 1873, and the price just seems to be consolidating here. Let's take a look at the NQs. So the NQs are interesting. They completed the ABCD pattern here. The price level we were looking for was 12,600, but the price action was so strong it actually went higher. We were anticipating that perhaps it could go up to this 78.6% Fibonacci retracement level to around 13,060, but it hasn't happened so far, and the price has been just declining right into this 61.8% Fibonacci retracement of the lows of 19th of January to the highs of 2nd of February. Also, we do have the 38.2% Fibonacci retracements coming in as a possible support from 13th of October 2022 to the highs of 2nd of February. However, the price did move lower than this 38.2% Fibonacci retracement, but we have this 61.8% here as well. So we have a confluence of two ratios coming together in close proximity. So this could be a pretty this could act as good support, but we'll have to see how the price action will unfold over the next 2 days. So finally, let's take a look at Dow Jones. So the Dow Jones, we like to take a look at the cash market. So this is the cash market for Dow Jones. It has been trading in a range. Initially, we were thinking of it will do an ABCD pattern, just the way the other markets have done, right into double top formation. This hasn't panned out. So what I'm going to do is I'm going to remove that here, and I am also going to remove this. So what the price has done is it has come to the bottom of this trading range, and it just poked below it and then moved higher. So that is something to make a note of, and just look at like the body of the candle, such a small body, and tomorrow's and the Friday's price action is actually key now. And also one thing to note is that the price is actually above the 38.2% Fibonacci retracement, which actually indicates compared to the other indices, this index is stronger. So that is another thing which we need to make a note of. Let's take a look at the futures for the Dow Jones. So here, slightly different picture. What we note is that the price did make a 38.2% Fibonacci retracement on the 20th of December 2022. Then it's been in a trading range. And what we were looking for, just like the cash index, was that perhaps it'll do an ABCD right into the double top formation. That scenario did not pan out. In fact, it found resistance pretty much at the top of the range, and now it is testing the bottom of the range and testing this 38.2% Fibonacci retracement, possible support level one more time. So we are watching this really closely for the next couple of trading sessions. And one thing to note is, because this one has only retraced down to its 38.2% retracement, this stock index is actually stronger than the other major US stock indices like the S&P 500, small cap Russell 2000, and the NQ has been the one which had been hit the hardest. However, when interest rate situation scenario begins to improve, just because some of the inflation numbers come in a little bit more tamed, we have seen that NQ actually begins to act pretty strong as well, which is kind of expected because this is one of the index which has been pretty hardly sold, so it has been sold quite a lot. This is what we are looking at in the major US stock indices. If you like how we analyze the markets on our channel, how we make use of the pattern recognition, the Fibonacci ratios, and put everything together with also traditional technical analysis whenever warranted, then please do subscribe to the channel. If you like the video, then please do click the like button. That just indicates to me that the videos I'm making are actually providing value to the people who are watching them for educational purposes. They find it useful. And if you're interested in getting to know when the new videos are posted, then please do hit that bell icon button. That way you'll know when the new videos are posted. Also, on the channel, I also cover other asset classes such as Forex. I'm looking at the certain key stocks and the US major stock indices, but I will also begin to look at the interest rate markets such as the US bond market. So those are the long bonds. Long bonds are the 30-year bond futures. We'll take a look at the 10 years. We can also take a look at some of the ETFs such as TLT, TBT. And even at times now there are like micro contracts available for 30-year and 10-year, which are quoted in the yield terms, but they're also pretty interesting to look at, and the liquidity is pretty good. They're certainly tradable. We'll also take a look at those to put everything together, and that we will be covering the interest rate markets, the currency markets, the bond market. So these are the two markets: the currency markets and the bond markets. They are really heavily influenced by the interest rates, and they're much bigger markets than the stock markets. So anything's interest rate related, these markets get impacted quite a lot first. And then obviously we are taking a look at the um, key stocks and also the major stock market indices. We can also take a look at some of the European stock indices, the German DAX, and also the FTSE 100, some of the Asian key averages such as the Hang Seng. But I'll just restrict those to the weekend reviews because otherwise the videos get really long. So thank you very much for watching the channel and the video. Good luck and good trading.